morning, good evening, good afternoon, wherever you are in the world. Thank you so much for tuning in to another episode of Market Check brought to you by BB. The title of today's stream, Digital Assets Wake Up Call, Market Check. Well, guys, what an intro. Louis still dancing. He's got the song stuck in his head, man. There is no second best intro. There's only ours. That's the truth. Now, today we're going to spend about 90 minutes explaining why not just the local top is in, why not just the cycle top is in, but why the 100-year high is in, and we will never, ever make a new all-time high. The feminine urge to just call the top every 10 minutes has overtaken this show. There will never be another top again, is what I would never say, okay? Is what I would never say, because we are going to go higher. Things look very interesting. We are seeing meme coins perking back up. We are seeing almost all but a certainty that the Doge ETF is going to not only be approved, but begin trading this week, which could really ignite something interesting. If you had told me 5 years ago that there would be a Dogecoin ETF, I think I would have called you crazy. But we are no longer trading cryptocurrencies. We are trading digital assets. It's a whole new thing, guys. It's a separate thing. You wouldn't get it. It's a totally separate thing. But anyways, guys, thanks for being here. Please hit that like button if you can early on. Let's get that out of the way. Show some love, show some support, hit the like button. And also, there's a lot of you guys out there that just look up the stream every day. You don't even subscribe to the channel. I mean, guys,
Really?
hit the subscribe button. I mean, don't be that guy. I'm that guy. I watch some YouTube channels and I don't subscribe to any of them. Be better than me. Okay. Do as I say, not as I do. Hit the like button, subscribe to the channel. We're going to talk about everything under the sun today because there's a lot to dissect. Louis, you got your chart up here, man. You seem to be calling for not the cycle top, which I don't understand. I don't understand. You must not have enough like estrogen in your blood right now. I don't know what's going on. But it looks like you're trying to articulate through drawings and visuals that we actually are going to bounce here. Am I seeing it correctly?
You are correct, Max. I am looking for a higher low and a high time frame uptrend, which is crazy to think about, right? Like
you're out of line.
Betting on the trend continuing, you know, like that's just bullish copium, you know. But yeah, in fact, I am looking for a higher low, and I think we might have gotten it. If not, we are very close. And what makes me say that? Obviously, Bitcoin is in a high time frame uptrend. Has been since March of 2023. So 2 years of high time frame uptrend. And every time along the way, we've every single time we put in some sort of consolidation or pause. We've had people calling cycle top every single which way, and we just continue to climb in our high time frame daily uptrend. And once again, I am looking for more of the same, where many people are looking for a cycle top instead of just betting on the trend and betting on this just being another pullback in an uptrend, which it looks like to me. And what's more important is we are above, major market structure here, which was our January all-time highs that we made this year at the beginning of this year. We've broken above that. We haven't gotten a true breakout. So Bitcoin did make fresh all-time highs, but we didn't really get a true breakout, which I would consider out of this, multi-month range. This is what I would call a break of structure. And what we're doing now is very likely just a bullish throwback or a bullish retest of what was resistance and attempting to flip it into support and continue on our merry way. Because this was it was more of a lackluster breakout. It was, right? And the reasoning of why this likely happened is you have breakout traders, right? You have people trading and trying to catch the breakout, Bitcoin breaking into fresh all-time highs. That's circulating the news, catching attention of people. Everyone thinks that they're going to be able to pile in and catch a free ride to $200,000, acting as a breakout trader. And all that's been happening is they just been getting chopped up for the last month and a half or so. And that's why breakout trading is not a profitable business, in my opinion, especially in crypto. Tons of false breakouts, tons of retraces, tons of throwbacks like this. They usually come deeper as far as altcoins are concerned. But this is very textbook, right? This is not something out of the ordinary. This is a very common in markets. When you get a break of structure, you do sometimes come back for that bullish throwback. You put in a month and a half long worth of consolidation at the highs, which while we were in it sucked. But I also mentioned while we were in here that this is going to serve its purpose as market structure to support price. So if and when we do break out and we don't get the breakout right away, we have this along with this market structure here. So we have massive amounts of market structure below. That gives me reason to believe we're going to see a bounce here. We should see some sort of reaction back to the upside. Whether we just go straight from here, whether we need a little more time, maybe we chop around and reaccumulate for a little longer. Who knows? But in general, it's my belief that this is a great area for a higher low on the daily time frame for Bitcoin, and looking great today. Would love to see some follow through on the daily and some closes on the daily above 112, 113K. I think if we get that, we have a great shot of starting, ending this local pullback and then flipping it into a pivot point and flipping it into a true breakout, which is on the table to ensue after this throwback and flip of market structure.
And Louis, can I ask you to chart Doge? Because
Sure.
Doge, obviously one of the largest crypto assets. Structurally, I would say looking pretty good. And there's a potential major catalyst going on this week. We're seeing meme coins as a genre, as a basket, outperforming really every other sector in crypto right now, early in the week. And it's still Monday, right? What do you see here with Doge? Like, let's just make the assumption that we do, in fact, get an ETF approval this week. I think it seems pretty likely that we will.
Yeah.
What are you seeing with Doge? And could you just expand on, like, do you think if Doge heats up here, you're going to see everything kind of go with it, or it will be an isolated move? Because altcoins, some look pretty good, some look meh,
Yeah. Yeah. I mean, Doge has been known to lead the altcoin market, especially the meme market. If you guys remember back here, this is a trade that we caught in the Discord as well. This is one of my first major trades as a fund manager. It was an awesome catch. And this move caught a lot of people off guard. Doge kind of consolidating into bear market support. And then bang, went on a 3 and 4x run. And this was a nice little rally, right? And this occurred around October, November, and pretty much from October 2024 through January, altcoins had a nice little rally, right? Bitcoin made all-time highs. Altcoins, I mean, it wasn't like the tide that rises all boats, but we did see a good amount of volume and liquidity return to crypto, in that short span of those couple months time. When I look at the weekly chart here, what's telling the story here to me, if I had to just kind of break this down, this was a very powerful overextended break of kind of your bear market base. Again, similar to Bitcoin, likely a lot of people chasing this move, right? Likely a lot of people chasing this breakout move, trying to catch the ride to all-time highs. And since this move, Doge has pretty much been bleeding back and consolidating, pretty much in, flipping old resistance into support here. So we've since returned to that. We've put in a beautiful, nice little double bottom structure here. And we're kind of slow grinding off the lows. And this looks ready for a move higher, right? This looks like we're just about ready to get going and likely put in the true breakout. So this was a nice break, a bear market structure. We've since put in 8-9 months of consolidation, reaccumulation, flipping this level into support. We're sitting above the biggest horizontal support on the chart here on the weekly time frame. This should be ready to start heading back to the upside. And very similar, right? I guess even if you look at the timing of the move, September, this is when Doge started its rally last year, September of last year. we're in September once again in 2025. So the timing and the seasonality also looking bullish for Doge.
Yeah, I think the Doge strength to me is kind of the biggest story in the market right now. You know, you want to talk about like a visual representation of animal spirits. If Doge breaks out, then you're going to get meme coin froth. Like, I mean, just study the relationship between Doge and a lot of these other large cap meme charts for typically when froth occurs. It usually involves Doge moving first, and then you see like this broader wealth effect because normies tend to hold Doge. That is actually kind of like the one coin that I think has like the highest signal wealth effect for retail. And I don't think, you know, that retail is that important, but you know, it's not going to be bearish for meme coins if Doge is potentially marking up here in a big way. So I mean, for me, that's kind of what I'm watching out for this week. Is a Doge breakout, has the catalyst, structure looks good. I mean, there's a lot of volume coming in on it as well. So that's really what you want to see, in my opinion, if we're going to be looking at risk on conditions here. And I imagine Bitcoin will probably, you know, I mean, obviously Bitcoin's going to have to cooperate if that's the case. I think it will. I think it will. I felt like we had the chance to break down maybe over the weekend, over the last few days, and there just hasn't been weakness. Not only has there not been weakness, but you know, I think the VIX is still within a broader downtrend that needs to resolve. So as long as those are the case, you know, I think we look pretty good for some meme coin froth here in the short term, which is what everybody wants to hear, right? But I think now that we finally have Doge showing this, I mean, it's been showing resilience over the last few days. But, you know, I think when you get that breakout, you're going to get things like Pepe finally following suit, you know, and obviously much more. And I like to see Hyperliquid breaking out as well.
Yeah, I think Hyperliquid made a new all-time high, right?
Did it?
I think so.
Hype new all-time highs, but they told me distribution again.
Yeah, Jack.
They will never learn.
One more sweep of the high before zero.
They don't. You know, the problem is, Jack, there's several people out there who have not been here for a true bullish, like, cycle for crypto, and they're only used to distribution, deviation. You know, they don't know good old fashioned bull chop into parabolic price action. They don't know anything about that, so they're gonna learn, right? And they're gonna learn. We tried to tell them.
They're gonna learn. They're gonna fucking find out.
Yeah. Yeah, this looks good. This looks like pre-parabolic. Like this is like it's just about to enter, you know, a massive move to the upside. And many people probably fumbled in here, for sure.
You know what else is going to move if Hyperliquid's breaking out? It's Per.
Yeah.
Perfect.
Study Hyperliquid.
I mean, I want to say the reason for the Hyperliquid breakout is more or less that they basically announced that they're going to have their own stablecoin, which, you know, I think we can have mixed opinions about on a longer term time horizon. But I think right now it's a very bullish catalyst for the chart, right? I mean, it's a sexy narrative for one, but it's also going to give them some leeway to do some dubious deeds.
Tell me where all these stablecoins will be launched on.
They will be launched on Hyperliquid.
And that will be launched on which chain?
Sounds familiar, right?
But on which chain will all of these stablecoins be launched on?
Hyperliquid, EVM.
He's looking for ETH.
I'm looking for ETH.
I see.
The answer he was seeking was Ethereum.
So will it be on Arbitrum, or are they moving away from Arbitrum?
Well, I mean, Hyperliquid has been actively working on, you know, their EVM and kind of establishing their own blockchain. So you'll be, I mean, you can onboard to Hyperliquid through more than just Arbitrum now. I think you can do it from Ethereum and a lot of other chains as well. But
oh, really?
I know their goal is to be more or less completely decentralized.
Interesting. Very interesting.
Per continues to look like Pepe last year, or 2023 to 2024.
Yes, it does. It's pulling this move here.
Ironically, Per was kind of one of the charts I was watching over the weekend really closely, because I felt like it was at a pivot where, you know, a lot of these memes, they just bleed and bleed and bleed until they break structure, and then they don't really give you much opportunity to enter.
Yeah.
But you got to see that structural break first. And I do feel like we got that on Per over the weekend, really yesterday. And it kind of goes hand in hand, in my opinion, with the Doge strength that we're seeing. That we're seeing meme coins finally start to perk up and break, or seemingly start to break, these multi-month bleeds that they've been in.
Yeah, it's a good meme C, even though it's not as constructive as it used to be. We have some price action here now. This is all we got. So hard to work with this, but I mean, I guess the higher time frame structure, this looks like, if I remember correctly, this has just been a price coiling up in here, with like obviously that November through October rally back down, and we've pretty much just been doing this, if I had to guess. But yeah, perking up.
I'm not sure if Max is here right now, but I think he was, Max, you were, I think, writing to TradingView about, you know, this issue. Did they give you an answer or?
No.
Okay.
They like acknowledged what I said, but didn't answer the question.
Nice. They would fit well into politics.
Yeah,
they would.
Wait, what was the question?
Well, they randomly reached out to me and were like, hey, as one of our TradingView power users, or something, like they said something kind of like goofy like that. Like, let us know if you have like any feedback. And I was like, oh, perfect timing, because I was just noticing that like the meme C chart got crimed. What happened here? And they like sent me some article, and the article like didn't explain it. It was just talking about what meme C was basically, and like some other TradingView like aggregated tickers or whatever. And then I was like, so thank you for this, but like, why did it get deleted? Like, can you bring it back? And they just like didn't really acknowledge the second part.
yeah.
So I don't know. I don't really care, because all that this means is that memes haven't pumped yet.
Yeah.
Memes just got listed.
I actually thank TradingView for this. Like, they're bullish on memes. They're bullish on crime. This is good.
Yeah, technically we're just getting started. We're just getting started.
Yeah, this is bullish crime. Like, imagine if they started this ticker like December of last year. Everyone would be like, oh, memes are never coming back. But now the normie is going to come in, learn about meme C on this channel, and be like, memes haven't pumped yet. It's great. This is good news for me. And then they're going to go, oh, if I buy 1 million Pepe and it goes to $1, I'm a millionaire.
Yeah.
So
classic.
But here's the thing: is I still have all my old meme C drawings.
Nice.
I still have my fib levels from the original chart. This is an awkward structure on ETH.
Yes.
It's very awkward, where like I could easily see that low getting taken, one more sweep of the low.
Yeah.
But we were talking about this morning in our Discord call. I went over the example. If you look at the Bitcoin breakout from last cycle in 2020, it did damn near the same thing, where you didn't get that sweep of the low.
This was breaking previous cycle all-time high?
Yes. So it was
right here. Oh, let me go to the weekly here, or at least maybe the 3-day.
Actually, I think, Louis, it would probably look better on the lower. Like if you could go to like the 6 hour or something, and then zoom in to the break of 20K last cycle. Zoom way in now. Keep going. That structure right there in December. That's my bullish hopium case right there.
Yeah.
Is that was a pretty obvious, not only sweep of like the local structure, but that was the sweep of the all-time high.
Yeah.
And you just didn't get a symmetrical sweep of that low.
That's
all I'm saying is like, maybe you don't get that perfect pullback, because I kind of think the perfect pullback would be like ETH to 3,800, 3,850.
I feel like a lot of people have become complacent and just like, oh, okay, I guess we're gonna have to get that sweep, right? And like, I feel like it's just the one that's not gonna come.
If things are really that strong, you won't get the perfect pullback.
Yeah, you should get a higher low. But definitely a possibility. But I like our odds for a higher low on ETH, like very similar to what we did here, right? And just kind of compress, ascending triangle, ascending pennant into, you know, major resistance, the all-time high resistance, bang, explosion. This is like pretty much exactly what we're putting in now.
I wouldn't say I have a
I'm
super
still more
strong...
in the camp.
Oh, go ahead, Jackus.
I'm still more in the camp of us thinking that we get that dip below that low, below the August 19th one. But I could see us, you know, front running like that 3,900 high or something from July. But generally speaking, you know, it doesn't matter much to me. Right now, I view it as higher odds than not. But essentially, I think the main topic discussion here is that we have a bubble of people trying to call a bubble. We have a bubble of people trying to call a cycle top. And whether we get this drop or not, and again, I'm in the camp of thinking we have higher odds of us happening that. By the way, I'm like I said that literally on that rate of all-time highs. But the main discussion here is really for what is to come for the next months and years for ETH. And in that sense, I think, again, whether we get this drop or not is irrelevant, because I do think we are heading into a proper adoption cycle right now. And that's, I would say it's really just starting for ETH. Like, obviously, the low already happened in April. But when it comes to confirmation, I think that really just happened now. We are kind of looking for like that pre-bull market, you know, that proper pre-bull market shakeoff. And but after that, the adoption cycle, in my opinion, continues for I think, you know, a year or more.
Yeah, I wouldn't say I have a super strong opinion on ETH here. I felt like the momentum looked pretty weak going into the weekend. Right now, the structure reminds me a little bit of like a smaller version of what we saw in 2024, like April to May, kind of right before you got that big squeeze back to the highs. I don't really think it's going to resolve the same afterward, but just kind of like that coiling structure, the way we've held the low, it makes sense. Even if we are going to get a drop, I think it makes sense for us to get some sort of squeeze at this point, just given how kind of compressed we are locally. Typically, I feel like it's pretty rare that we just see price dump from this structure. But, you know, like I said, I don't have a super strong opinion on ETH here.
I think the market is still waiting for all the sort of, you know, bearish narratives to kind of fade out. I think that's the right word, fade out, because we had the, you know, unemployment data last week. This week is CPI. Next week is FOMC. We know kind of what's expected, but the thing is that people are still, you know, kind of waiting it out. We have the September bearish seasonality, and obviously it's been out of the window. I'm just saying there's plenty of people who will look at September and will be like, all right, there's unemployment data, CPI, FOMC, bearish seasonality. You know what? I'm going to wait. I think that once all of that is gone, then the bid resumes pretty much. kind of don't see really a bearish catalyst actually for the rest of the year, except that for what we have in September. So I'm not really actually sure what the current cycle top reasoning is, except like cycle top is in because it must be in. So that will be interesting to see how that plays out.
Yeah, I'm not so sure I really care about the seasonality that much, because I think it's another thing to consider. I think it's another good point of confluence. But the truth of the matter is seasonality has been the biggest giga fade this entire cycle. And that's not to completely dismiss it and say that it doesn't matter. But I think if you're positioning solely based off of seasonality, you might as well just flip a coin. Like, there hasn't been a ton of alpha in the seasonality this cycle. But I think it's something to keep in mind.
I agree. I think it goes kind of with anything. If you're gonna look at, like, I love RSI, but I would never, just blindly, do anything just because of it. When it comes to seasonality, I think it's similar. Like, it has relevance because it has historical relevance. And, at some point it kind of is a self-fulfilling prophecy. People will look at it and be like, all right, September is the worst month of the year. I'm going to wait it out, right? Or like, I'm going to it's sort of like, why do moving averages make bounce? Well, because other people think that they will make bounce, right? And you can apply that to anything. At the end of the day, it comes more to the context, I think, as with anything. And I would say that sort of played out, but it, just like last year, got front run in August. And then in September, you kind of get the leftovers of the drop. If, of course, obviously, at some point, the seasonality will come back because, again, there is relevance to it. Question is if it's now. I don't know. I would say we are in overall pretty bullish conditions for the next year. And when I look at ETH, I would say it sort of played out in August and September. We definitely didn't rally. But if you are looking for some monsters drop in September, then I don't think that's coming either.
Yeah, if we had alts rallying hard for the last couple months along with ETH, I'd say plausible. But we haven't had that. Instead we've had similar to Pepe, like just time-based capitulations, consolidations into high time frame demand on several altcoin charts across the board. So if we had Pepe up here doing this, you have ETH kind of dangling around all-time highs. I'd be way more open to the idea of a flush across the board, but people are looking for a flush on a market that hasn't even moved yet. That's like they want a bubble pop without the bubble even being blown up yet. It doesn't make any sense.
Yeah, that's why it's so different again, this cycle, because it's going to be different when we speak about Bitcoin, different when we speak about ETH, and different when we speak about certain coins, alts, digital assets, whatever you want to call them. Yeah. It's gonna be different that way. So,
well, Jack, is the federal narrative is not crypto; it's digital assets.
It is, but I would say it actually does. I have a strong thesis about this. I would say there is a benefit in flipping your mind from the cryptocurrency into digital assets, because I think that the old thesis of cryptocurrencies is gone. Cryptocurrencies have been built on being decentralized peer-to-peer medium of exchange outside of the system. I think that narrative has died out long time ago. I wouldn't even say it's relative for BTC anymore these days. Digital assets is going to be, this shift is more gradual. It's more like, shift in what each of them do. I suppose you can still call them altcoins, right? Like lots of people will, they will call them crypto and altcoins, but it's going to be more about like digital assets, more in a stock type of thinking. You know, you're not going to be using your, I do not know, Lido token, right, LDO, to buy a coffee. No,
Yeah.
but you'll
That'd
be
be funny.
using it.
Mhm.
Do you guys accept
know-
Lido here?
Exactly.
You accept Lido
Exactly.
scam?
But the whole interconnected system is going to be using it. You know, protocols will be owning each other's tokens to have a, you know, government right and bribing rights and so forth. So in that sense, it's going to be a digital asset economy going into the future. The, you know, the old DeFi narrative that was there before. We haven't had, you know, as many protocols as we do have now working, and not all of them have been launched. But the main thing with them is that it didn't have a government approval before. All of that changed in just recently with the Genius Act, and obviously you didn't have the big boys from TradFi being positioned. This market is no longer retail driven, it's institutionally driven. And obviously, you know, you can still PvP in the trenches on, you know, 5 million market cap tokens that they just got launched, yes. But when it comes to, you know, I would say, you know, top 100, maybe even top 200 assets by market capitalization, that's no longer the case. You know, retail definitely cannot, you know, move neither Bitcoin, neither ETH as much, if at all. Just from like an intraday perspective, yes, but not from, you know, weekly, daily, monthly. So I think that shift, you know, understanding how the institutions and governments are, you know, going to implement this whole space and merge it with TradFi is detrimental, because it's going to increase the efficiency cost across all of traditional institutions. So yeah, I think that's a, but obviously it's not going to be the old thesis again of cryptocurrencies. It's not going to be, you know, decentralization, giving power back to the people. None of that, you know. It's going to be, yes, you know, it's going to be efficient for you. You know, you'll be able to, in the future, you'll be able to collateralize your real estate onto the blockchain, then lend it in ETH and borrow against it. You're gonna get directly stable coins,
bullish.
whichever you will prefer, and you will be able to go to a local store and pay with those stable coins, for example. But and that's going to be easy, and it's going to be made for everyday user. And if you will understand how these systems connect with each other, you will be able to make money out of it by investing in them. But yeah, this is the future. This is the shift from, hey, you know, it's all, you know, all of these cryptos, shit coins, right? That's the old thesis. That's played out with all the dilution. And it's going to shift into these systems that will truly increase the efficiency, that will truly make the systems around the globe work much better and much cheaper and much more user-friendly too. And that's also what I believe will make people believe again. And that, I think, will create the next speculative bubble too. And I think it's going to last years. But it's also bearish some very, you know, like you will need to be more picky. You will need to be more picky with what you buy. The dilution has been as insane as you can think. You know, every ticker, not only every ticker got launched, but it got launched on 10 different chains. You'll need to be picky with what you get, which digital assets you'll buy. going forward. You need to have conviction behind them. But
I really don't think you should buy anything that has
Yeah.
VC emissions. If you're looking for like a long-term investment, I mean, we can already see what that does to the ceiling on a lot of these assets as far as USD prices go. I mean, look at things like Arbitrum, things like, there's so many different examples. Like even Solana is so much more diluted than it was in 2021. So if you are buying those assets, I think it's not really like, okay, I'm going to invest now with the assumption that it will be higher in 10 years. It should be, okay, I should be only looking to buy these sort of assets in deep value territory, because they consistently will fall into deep value territory and you can buy and sell them for higher. But for the most part, I think you're right, Jack, as people will need to be more particular and purposeful about what assets they're buying here over the next few years, because I mean, we've already seen it this cycle. Alt season, as people think of it in terms of like 2021 or spring of 2021, you're probably not going to get just broad dispersion of the entire altcoin market outside of a very small handful of times over multiple years. We saw it maybe once or twice during this cycle, but for the most part, you get a handful of outperformers. And also the assets that have consistently accrued value over time against Bitcoin and in USD throughout the cycle. There are not many assets that's applicable to. So I think that kind of needs to be your criteria that you're using before investing. It's like, okay, yeah, I am very bullish on this asset, but what are the odds that I'm missing something? I think Robot James had a great tweet about this. If you guys know who that is, he's just like this super wealthy market maker. He used to do crypto a lot more frequently. I don't think he's really in the space anymore, but he basically said, if you think that you found something unique or that you don't think that anybody else has found in markets, it's highly likely that it's either not unique or you haven't, or you're missing something. And so you kind of have to have like a certain level of skepticism at all times if you're in financial markets for those reasons. Because in general, markets are priced very efficiently. There's a reason that the market prices assets in the way that it does.
Yes and no, absolutely. But also it can cause it can cause you being paralyzed because of too much skepticism at the same time. So at sometimes the prices before it went back to zero. Lots of stocks have been, held down for years before all all weekends were shaken out, and then there were no sellers left, for example. And so I agree. It's always good to keep yourselves at check. At the same time, if you're gonna push it too far, it can leave you to just be a cycle top caller, actually.
The worst thing you can be.
Because you will end up at nihilism at the end, in my opinion, if you're gonna be too skeptic about things. It's about balance. It's about understanding the risks, but at the same time, seeing like the value and where it can be in the years to come. And when I look at this ecosystem and where it's headed in the years to come, and again, the narrative of it has been there before. Maybe not fully functional, maybe not like fully launched too. Not all the products have been there as they are today, but it was there. But what wasn't there was that the big guys were not positioned. That's, I think, big issue. And second, the legislation wasn't there. And you can think, where the, and I'll leave this to everyone's imagination. Was it because the big guys weren't positioned and it was done intentionally, or was it just randomly, right? Like, was it just that there was no legislation that the big guys were not positioned, or was it that there was no legislation because the big guys were not positioned? What I'm saying essentially
it's the big guys.
That's up to everyone.
Because when the big guys get positioned, then conveniently the legislation acts as a tailwind,
Of course, but I'll leave that to everyone's beliefs, right? It doesn't essentially matter. What matters is that it has happened finally. And again, what was the case for the whole space in the past, let's say, even if you include this year, for the past 5 years? SEC has been attacking literally every single project out there. And even those who wanted to do something, or people who wanted to invest, they couldn't, because they were afraid that they're going to invest into something and then SEC will deem it as a security, right? And you can speculate, was that intentional or was it like justified? And at the end of the day, it doesn't really matter if it was or not. Probably, there was some part of crime. Probably there were some useful idiots in it as well. But in reality, it simply happened. And so, but right now, it has changed. Big guys are positioned. They are telling you they are getting positioned. And you have the legislation for it. But you haven't had the upside for it yet when it comes to the whole ecosystem. And it's not only now that they are positioned, it's also that the US government needs this to work. And I think that's also another aspect. They literally need, for example, the stablecoin issuers to be the largest buyers of US debt. They need the financing to come down. And how do you make it come down? Well, by creating a mass demand for US government debt. So not to mention that you will expand stablecoin dollars into every part of the world. So that's like win-win-win for everyone. And that's a huge fundamental shift alongside the TA that we got, again, looking at ETH. And I think lots of people are too busy, looking at past cycles, not seeing the context. Again, what the past cycle was based on, that was entirely printing cycle. What this cycle is based on, it's an entirely different. It's adoption. You're getting legislation, you're getting institutions involved. It's completely different context. So I think all of that is coming together. I think all of that is going to, again, last years. I don't think it's just going to be digital assets. I think it's the marriage of generally, TradFi, AI, and digital assets all blending together. I think it's going to be a big shift from mega cap techs, the S&P 7, S&P 7 stocks versus S&P 493. You will see mass shift there too, and that's going to transcend here. And again, in the end of the day, the end result, 10 years later, when it is obvious, is going to be huge efficiency growth and way easier, user-friendly system for everyone to use.
I'm going to say something that I thought I would never, ever say. And it's a pretty dangerous thing for me to say, but I'm going to say it anyway. And it is playing off kind of what you were talking about, Jackus. I mean, I think as blockchain technology continues to be adopted, I actually think Ethereum is going to have a much less brutal bear market than Bitcoin whenever that arrives. I just think at a certain point, the potential for value accrual on ETH is so much higher than Bitcoin that I do think we are getting closer and closer to a real decoupling of what those assets fundamentally represent. Yeah. I don't think we're there yet. But I do think that Bitcoin will have a more brutal bear market than ETH whenever that arrives. That's that's a dangerous statement to make. But I'm gonna.
Tommy, if you think back to last bear market too, I know ETH struggled the cycle, but during the FTX collapse, Bitcoin made a new low and ETH did not, right? So it's something we have seen in the past where maybe not percentage wise from global top to bear market bottom, but structurally, we have seen ETH hold up a little bit better than Bitcoin for whatever reason.
Yeah, I feel like at least last cycle, I mean, I will say for one, I don't want to just discount the fact that ETH basically drew down 80% between May and July of 2022. But ETH kind of had more built-in leverage than Bitcoin did last cycle through DeFi. It was it was kind of like the most popular trade in the same way that Solana was, but to a much larger, or that Solana is this cycle, but to a much larger degree back in 2021. Yeah, I mean, I just think Bitcoin this cycle is probably going to be the coin when we look back. It's like, okay, yeah, everybody was right. It did have a lot of leverage built in, and it will likely, I don't know if the drawdown, I don't know what the drawdown will be. I'm not going to speculate on that, but I think from a timing standpoint, it will take a much longer refractory period from Bitcoin than it will for ETH, because I think, to highlight what you just said, Max, I mean, we saw ETH not make a lower low while Bitcoin did during FTX. I mean, we've already seen ETH have a much larger mid-cycle drawdown than Bitcoin has. We saw it already throughout the course of this year. We flushed out a lot of the cyclical leverage on ETH. We have not done that for Bitcoin. So I don't know when it's going to be. I don't know from where it will be, but I do think that ETH will have a much less brutal bear market from a time standpoint.
I would even modify it, Tommy, and I would say that yes, but the brutal bear market actually will not be that brutal from my point of view. I think the next bear market will be more time drawn out than percentage to the downside. I obviously at some point, Bitcoin and ETH will both go through like larger percentage drop, possibly -50. But I don't think we are going to see -70 drops anytime soon. And I really think the next, especially for Bitcoin, the next, I'm not sure how to call it, but like local top, it's going to be top. It's just going to be extremely drawn out. It's going to be more like gold in, after 2012. And just that sideways period while other stuff runs is going to cause people to give up on it and hate it. And that will be enough. So it will not be too much in terms of percentage, but too much in terms of time. Because time is sometimes even more important than percentage in the markets.
I think time is more painful than percentage for most people. I think the Solana meme coin frenzy, especially for crypto natives, has definitely made time and these quicker dopamine hits just like a much higher, it affects them much more when we have these long periods of range and chop. Because everybody feels like they have to be doing something all the time, because it seems like on something like Solana, there's always something going on. But in reality, Bitcoin's just going sideways while we're undergoing like these boom and bust cycles on chain.
Yes.
Yeah, it's way easier to stomach a quick like 30-40% drop that has a high likelihood of just bouncing back versus months and months and months of thinking you're going to be bottom and you're not. That more or less drives you crazy. And that's been the story of this cycle.
This is partially true too. Like all of this, efficiency growth obviously will be to a big degree, paid for by our freedom. Like lots of your identity, lots of your information will be online, and it already is actually. So I do agree with that. I'm not saying that like in an ideal world, of course, we probably are all using totally decentralized systems, private. But unfortunately, most of the society doesn't think that way. And so what people truly want is to be able to send dollars from one side of a world to another in an instant. And that's the current thing, and maybe that changes as we go in the future. but that's what people currently need. Seems, that's where the demand lies, and that's where we are headed, in my opinion.
I've always said crypto's best utility is non-sovereign storage of value. If for whatever reason Bitcoin or ETH are no longer fitting that purpose, then I think they will. The other one's going to outperform the other one. That's true for Bitcoin and ETH. I think you could argue early in this cycle, ETH really wasn't a great non-sovereign storage of value, and that obviously Bitcoin was taking a majority of the flows for that reason. But feel more and more like ETH is kind of taking those flows over from Bitcoin. You can see that reflected not just in the daily volumes that we've seen over the last 2 or 3 months, which we have seen ETH consistently having more daily volume than Bitcoin, which has never happened for this long ever in crypto. So for one, that's completely unprecedented. And I just think over time, right? I mean, as crypto fulfills that decentralized finance role, as it fulfills that, this is money that's supposedly outside the system, you're only going to see more and more capital flow into ETH, I think, because I think they're only going to print more and more money. And I guess you could argue that's bullish for Bitcoin too, but I think they are diverging into two fundamentally different assets at this point, and that eventually the scope of what ETH is looking to capture is probably larger than Bitcoin. But we'll see. I don't want to get too optimistic with the ETH outlook on a higher time frame, but I do think the scope of the flows ETH is looking to capture is probably bigger than Bitcoin's.
I don't think it's no longer money outside of system. I think it becomes the system.
I think they're trying to push crypto up because they think it's money outside the system, and they're going to try and extract in the same way that they have, just on a larger scale. And what I think will eventually happen is a lot of the money is just going to stay in crypto, and they think they're extracting back to fiat, and fiat's just going to keep depreciating over time.
Yes, but I think I don't think the original thesis of cryptocurrencies again have been it's money outside of system, decentralized, peer-to-peer and so forth. I think the next wave and where the space is heading is that it no longer becomes money fiat outside of system. I think it becomes the system. I
guess you could say is why ETH is probably more appealing than Bitcoin on a high time frame.
Yes. I think JPM. Well, I don't even think it's something I think. I think that's literally what JPM is looking to do. They are launching stablecoins, and they will do that on ETH as the most decentralized network out there to do so. It will be a yield generating machine, a settlement layer for this new economy.
Have you seen Mr. Robot, Jackass?
Yeah.
There's the the scene, right, with eCoin and Bitcoin, and I think some of those themes will probably persist, right? With eCoin, we control the ledger, right? Bitcoin has too many large holders that are completely unknown.
Yeah, true as well. So yeah, listen, JPM will be launching their stablecoins. You'll be using it to pay. You'll be using it to lend, and essentially it would not surprise me if even perhaps they will go around CBDCs in terms of just their stablecoins. Essentially it's going to be the same thing. But it's the way in my opinion we are headed, and lots of these protocols will be used to build that new system on it.
I agree with that. No, I definitely agree with that. I mean, we're already seeing, I feel like some incumbent USDC seems like they've been a little bit caught off guard here by the fact that a lot of central banks seem to be wanting to issue their own stable coins. Hyperliquid is now about to issue its own stable coin. Tether already kissed the ring. They're buying US treasuries. I don't think they have any real threat going forward, other than, maybe they lose some market share dominance to these other stable coins. But yeah, I mean, USDC is potentially a different story going forward. Not to say that I'm bearish on USDC completely, but Circle's chart, Circle Bank, doesn't really look the best. It seems like they're about to lose. I think Circle will and USDC are going to continue to lose market share as we go forward to other stable coins.
Yeah, I would agree with that. I feel like they still have some market share they could take from Tether. But I agree, the market's beginning to see more entrance to that market. Ripple's doing it. The Trump family's starting to do it. Hyperliquid's doing it. Hyperliquid's doing it. Trump USD. Because it's pretty much a brand new way to become a bank, which has been pretty much gate kept for the last 100, 200 years. So these new stablecoin companies are pretty much becoming digital banks, and it's like another wave of companies being able to have that power and of being a bank, which would likely be very profitable moving forward. I mean, as far as the chart's concerned, I could see this bottoming around here. This looks like a crypto IPO now. And it's either going to seed here, or if not, we're going to come down into here. So I don't know if I'm a buyer, because there's a good chance you could do put in what looks like a bottom here and then get G'd down to here. So we'll see.
I mean, that looks like so many Solana meme coin charts we've seen.
Yeah, it really does.
I do think sub 100 is a really good buy for Circle.
Yeah, anywhere in here. I think if you got the opportunity to buy in here, that's a shove. And I feel like it might put in some sort of false bottom in here. Because, I mean, this is probably due for a squeeze at some point. This is like a pretty methodical, slow bleed at this point. So I'm sure this is due for some sort of squeeze. But the question is that a squeeze that forms a higher low, or is that a squeeze that traps people, comes in deep, puts in the real bottom? Something.
What do we think about the fact that this kind of looks like the Coinbase chart from 2021?
Yeah, well,
from 2022 for that matter.
Yeah, I better hope that it doesn't do exactly what Coinbase did, because that went through a multi-year bear market.
Yeah, but important to say that you need to put it into context of where it was launched. Coinbase stock was launched at the peak. So it literally was launched April 21 when most stuff made their top, their actual top. Like if you're gonna look at Doge, it made its top in April or May 21, and so that wasn't the best time to launch.
Or it was the best time to launch, right? I guess it depends.
Or it was, right? Or it was, depends. But at the end of the day, for the price, it meant that it would follow the broader market conditions. When it comes to Circle here, I think that's entirely different situation.
Yeah, I mean, it bounced, right? So IPO straight down, bounced, because this was Bitcoin's first peak, was the IPO. Bitcoin came up, had that deviation high peak, all coins ran again. But Coinbase just made a higher low, and just multi-year bear market that we're just now getting out of. Well, you could say we got out here, obviously. And that's kind of why I'm still bullish on Coinbase stock.
Yeah.
Beautiful rally off the lows. Pretty much this was a 3x, right? This is a 200% rally for Coinbase stock from 150 tagging the all-time highs with little to no kind of correction or pullback. So rejecting at the old all-time high on the first attempt makes sense, right? And we've since pulled back. It looks like we're doing it looks like it wants to put in a higher low somewhere in here. And I am a buyer, right? So I am, was buying Coinbase down in this area. TP'd, a little bit along the way, a little more at all-time highs. We're pulling back, and now I'm a buyer anywhere, above 270. And if Coinbase can hold 270, this area, I think this is great potential for a higher low. We start testing all-time highs again, we get the breakout and we get price discovery. And I think this is kind of where, if you see Coinbase trading up into $600-$700, crypto altcoins have had, sizable rallies for a couple months. That might be a good sign to start looking for possible topping signals. But I don't think the crypto market's going to be topped until Coinbase is in price discovery and trading around those valuations.
Yeah, I agree with your current analysis, Louis. I like it.
Thank you, sir. Yeah. So, yeah, I'm a buyer again.
Maybe the profit taking level is too shy.
Too shy. Okay,
Too
I like
shy
that. That's fine for me. That's fine for me.
That would only imply ease at 8K, and I think that's going higher.
Well, we got more targets here, Jackus.
All right.
You like 1,000, I think.
4 digits. I like
4 digits. Yeah, I'll take it. I'll leave a runner.
It's always tough to, stay realistic, but at the same time not think, too low. And I think like $700 for coin is too low. With what I think is going to happen in the next years for this space.
Yeah, I mean, when you look at it like this, it's literally less than a double from the IPO price, an all-time high from 2021. You're probably right. You're probably looking at something in between here. Maybe I'm just too bearish.
I used an example today and the VC chat. It's like with these two low targets, right? Imagine you're, studying for a doctor. You go through, elementary school, then high school, then university. You have to do all your credits and, probably, go and do like a practice in real life and all of that. So you spend like, generally 30 years of your life to become a doctor. And imagine that you spent all that time to be a doctor for a year of your life, and then you decide to do, some low-tier job instead after that 1 year. That's what it's like to be taking profits at these cheap levels on, or like, like when you're gonna look at ETH, for example, and you're gonna look at it from like, the past 5-year perspective, where it spent its time between 1,000 to 5,000, and it would be like, yeah, I'm gonna take profit at 6,000. No, you didn't spend 5 years accumulating for it to pump from 5 to 6K.
Yeah.
That's like, again, you studied 30 years to become a doctor. You're gonna be doctor for the rest of your life.
Yeah. People don't understand that.
By the way, I think the dollar still looks like absolute garbage.
Yeah, I have to lower my targets here.
Well, the yields are gonna get sent lower, so will DXY.
I mean, how about this fractal though? Crazy.
Yeah.
I was right about this playing out. I was wrong about crypto not absolutely pumping face during this move. So that's sad, but hindsight 2020. What are you gonna do? But maybe on this last plunge, which it looks like it's gonna make, maybe we see a big bullish move out of the risk assets, the high beta assets on this plunge, because it looks like we're coming lower. It does, unless this miraculously saves itself and does that. I just think that's less plausible at this point, and we'd probably come a little lower.
I think once again, Louis, you have too high targets here.
What do you mean?
Your targets are too high on DXY.
DXY is going to 70, bros.
Too low, you mean?
No, it's
too high. Yeah, too high. Okay, so lower. You think we break this double bottom here at $90?
I do think so.
Wow.
And
I think we go 70.
I've been saying that
chart here
since 2022.
Let me put this.
That's my goal.
Okay, looks like I have drawn this before. So you're looking at this. That looks plausible when you look at it this way.
You need to look at it this way.
You're right. I'm sorry, Jackus.
Apology accepted.
I think we can get the dollar here. I think we can get the DXY to 90 this year. I think over a multi-year time horizon, it could go as low as 70.
Wow.
If the US is looking to export more again, and be a manufacturer again, obviously it's not going to do that in every segment, but it's definitely sure that the current administration wants to bring more jobs back to the US. If you want to do that, you need a cheaper currency, because you then gain a competitive advantage across the world. Not to mention it brings the yields down as well, and that brings down the borrowing cost for the government. So I think there is not only a technical reasoning, but also fundamental, which is important.
Yeah, I mean, I think for me, it's like, well, we're going to see the dollar continue to trend lower as more and more people head into risk assets. In a bear market, hypothetically, they're going to print more money. It's really difficult for me to make a bull case for the dollar on like a 3 to 4 year time horizon.
Holy crap. Are we here, guys? .com bubble? This is post.com bubble. Never mind. I thought this was going into 99. So you had the dollar pumping during the .com bubble. That's interesting.
Yep. I kind of feel like the last, like 2021 was probably closer to the tech bubble, honestly. But I couldn't tell you where we are in the second.
Yeah, I can see that.
Or if we've already come out of 2008, like who knows? I do know the dollar is going to go down a lot. I mean, at some point, it's going to go down enough that there is going to be like actual problems in the market. Ironically, 2021 was kind of an anomaly in the sense that we often see some of the largest market crashes after the dollar has devalued significantly, whereas like with 2021 and 2022, that bear market was largely correlated with the dollar rising. So yeah, I
dollar
don't know, but
2008, Tommy.
Yeah, I mean, you look at things like 2008, like 1987, both of those crashes were preceded by rapid dollar devaluation. So I kind of feel like we're about to see rapid dollar devaluation.
I think so too. And then, but yeah, first, bigger upside. I said this before. I think we're gonna see more or less stagflation or sideways for megatech stocks, but we will see a rise in small caps, and yeah, right now it's going to be accompanied by DXY dropping. I think if you're gonna put actually Russell, maybe you can put the Russell / SPX.
Yeah, I was about to say
below this, or just on
Russell against SPOOs or even QQQ.
Do you want it by itself?
Type no. Use the plus function.
Yeah.
Type RUT. RUT, yeah. / SPX. Yeah, and just add it in. So as you can see, Russell was appreciating against SPX through that whole DXY drop.
This here.
Yeah.
Yeah. So you had the .com bottom. And then, yeah, you had multi-years worth of rally. And this is Russell outperformance of the S&P, correct?
And when the dollar goes up, that's bullish for mega cap. When the dollar goes down, that's bullish for small caps. And
yes.
I think dollar is going to continue to go lower.
And that's why I'm surprised we haven't seen that yet. But unless the drop on the dollar, like you said, is way bigger than I'm thinking, and that's why it hasn't happened yet, because the drop is just getting started.
Exactly. This is what confuses lots of people, is that these correlations are not day to day, not even months to months, on months to months basis. It's very, higher time frame, and it's more about like through economic supply and demand and incentives and so forth. So it takes time. Again, like that drop on DXY, that lasted 8 years, and during the time, you had drops on Russell against SPX too. But it continuously kept going up. And I think this is what's going to this shift is going to transition over the next many years.
There were many, many young men who built fortunes in that 2000 to 2008 time period on Wall Street. And then
that's you, gentlemen, right now, without you knowing it.
Yeah. The goal is to keep it, though. A lot of them got wrecked in 2008. So.
But many got lost in the trees.
Yeah. Yeah. I like it. I like I'm picking up what you're putting down, Jackus. I like it.
That's pain trade is small caps outperforming tech.
Yeah. I mean, the Russell, man.
People often think like of real estate, right? Like there's going to be this giant real estate crash, but most of the time it's not that real estate crashes in price. It's more that real estate just goes sideways and they don't really get pricier. It's more that the real wages actually catch up on them, right? For example, we can even use SPX. Can you type SPX there, Louis?
New pain?
Yeah. No. Sorry. Just on the chart.
Oh, you
SPX,
want the chart?
right?
Gotcha.
Yeah. And now do the same, but type SPX/USCPI. /USCPI. And add that into new pane. Or like, yeah. Okay, can you perhaps separate them?
To a different pane?
Doesn't have to be new pane. It can be on the same chart. Just wait, let me maybe just quickly.
Let's see here. Hold on. There you go. Like this?
All right. And yes, and put the bottom chart in candles, perhaps. Not that it is that necessary, but
oh.
Yes, fine. And zoom out on like a monthly perspective. No, we do not need it that zoomed in. And now go to the 70s. Adjust the scaling. And now look, can you do an all-time high line on both? Can you do it from the, do it at the bottom first, yes. and now do it up top from the same high. Yeah. Now look how much longer it took for SPX to catch up in real value before, or like how much quicker SPX was versus SPX against US CPI in real terms, right? That's a, you know, if I'm not mistaken, that's nearly 15 years difference.
Yeah, this S&P was starting to break out in the 80s. This didn't really break out. Like if you want to count it to here, in 93. So 13 years.
And so in today's terms, the S&P 7, which is the 7 biggest tech companies that now have the highest percentage valuation of the index in history, I do think what's going to happen is that it's not that they will dump down a lot. It's just that the market share and the percentage will change. And so if you were to use, for example, this, I think in real terms, it will take them much longer to kind of go up again in real terms, or it's going to take much quicker for the low caps to catch up on them. If that makes sense to you guys.
That makes sense to me.
Yeah. Yeah, no, it definitely does. It's an interesting way to look at it.
I think a good way to wrap up the show is to answer a question that we got earlier, which is to name an industry that you're bullish on as well as one that you're currently bearish on going forward. And I guess I posed, you can go first if you already know them. I wanted to give you guys time to think about it.
No, I already had it thought about. So I'm insanely bullish on obviously digital assets and AI and the marriage of them, and commodities, of course. And I'm insanely bearish on what is the time horizon, by the way?
Could be any time horizon. I mean, I guess it depends on a lot of things.
I'm definitely bearish on real estate. I think that's a segment I don't see catching up much. I think there are incentives to keep the prices low and or not skyrocketing because of the unaffordability, and those can be even political. And second is definitely bonds. I think we will see a new wave of interest rate hikes in the future, and I think therefore bonds will still go down. I think there is current upside for TLT, even for TLT, as much as I'm more bullish on shorter term bonds than longer term, of course. But yeah, I think in the next 5 years we will see new wave of interest rate hikes.
I would say some sector that I'm bullish on is data, particularly data storage. I don't really know the best way to play this yet, but I just think there's going to be a really high demand for it, given AI, quantum computing. There's going to be a lot of data that needs to be stored. And I don't really know the best way to play this. I've been kind of looking at something like Dropbox, for example. I'm sure you could find better options if you really wanted to research it, but I'm very, very bullish on companies that can effectively store data at low cost. And then I would say an industry that I'm bearish on is just kind of consumer goods, like a Costco. I think I look at a lot of those charts. I think they're completely cooked. But that doesn't mean that markets can't go higher, right? I mean, we're kind of seeing tech continue to lead the market higher. We're seeing consumers continue to purchase things with credit. Yeah, I'm bearish on consumer stocks like a Costco. I think they might already be topped, quite frankly. But Yeah, bullish on data storage, bearish on consumer stocks like Costco.
Yeah, definitely data centers, bullish on that as well.
Yeah, I mean, obviously, I'm bullish on crypto.
Digital assets.
Thank you for correcting me. And AI, of course. But I'm obviously way more invested in crypto and digital assets. And I agree with Tommy. I'm bearish these consumer staple stocks due to the fact that my thesis is, a lot of these stocks that have been running for this large period of time, we're going to see a lot of these profits rotate into low cap stocks and stuff like that. So because I think low cap stocks are going to do well, and we're going to, money's going to begin to move down the risk curve, it's got to come from somewhere, right? It's got to come from somewhere. And, a lot of these consumer staples have had multi-year bull market rallies that are likely coming to an end. So definitely more bearish on them, just due to the fact of the length of the length and the amount of time, these assets have rallied and where I think we're at as far as money starting to come down the risk curve. So that would be my answer as well.
Have you guys heard, by the way, about the gamblify of consumer spending?
No.
Yes and no. Not in maybe the sense that, I don't know. What do you mean by that?
Let's discuss on Wednesday.
All right. I think that's probably a good spot to wrap it up, guys. Thank you for tuning in to today's episode of Market Check. Reminder that we are live Monday, Wednesday, Thursday, and Friday with a typical start time around 11:15 a.m. Eastern Standard Time. So make sure to leave a like if you enjoyed the stream today. Even if you didn't, you want us to stay on YouTube just so you can make fun of us. Drop a like, subscribe to the channel. That's the best way to keep us here. But yeah, we also have Market Talk hosted by the legendary King Wabi. That is our afternoon show hosted on X.
So and Base Space.
And a Base Space today with Louis and Prometheus. I was going to ask if Prometheus was going to be on there with you. So we got programming for you all day. Make sure to check that out. Stay following and subscribe to the Because Bitcoin X account so you can be notified when we schedule those spaces. And of course, also when we go live. Of course, we have just launched some very killer products here over the last few weeks. So if you are looking for something that can give you an edge, whether that is trading leverage, whether that is on-chain markets, we have some particular offerings for you. If you're into leverage trading, lower time frame, even looking for just signals on some of your favorite altcoins, right? Like Doge, Solana, and even Pepe. We have a Discord that is currently giving out signals using the Volume Fusion Pro. You just have to sign up for with using our Blowfin referral link, and you are given access to this Discord. And of course, some of those signals, if you continue to do volume, you might actually get some access to some more signals as well. But again, I don't want to give away too much before we actually launch those products. Of course, we also just had unveiled the BB term. Sorry, it's a Monday, guys. The DGen page for the BB terminal, that was about 2 months ago. But we continue to improve the functionality. Our dev Ed has kind of hinted at some more functionality that is actively being added to it. But if you're looking for something to give you an edge on chain, on ETH, on Sol, maybe even some bigger nooks and crannies that we typically see throughout on-chain markets, check that out as well. I'm going to play a quick ad for the terminal as we walk out here, but we hope you guys have a great rest of your day and week. We're going to have it's a very interesting week of markets ahead of us, I think, but we'll see what we get. Thank you again for tuning in as always, though, and of course, stay safe.
Tired of outdated trading tools, confused charts, dozens of tabs, endless stress? You're not alone. Introducing BB Terminal, your all-in-one command center for crypto trading. Track your portfolio, monitor the markets, stay ahead, all in one place. From chaos to clarity, from struggle to success. BB Terminal,